Hi everybody, and welcome back to FANG Friday. This is Ross Healy, the Chairman of Strategic Analysis Corporation and a Senior Portfolio Manager at McNichol & Associates Asset Management. After taking last week off, we are back and ready to go. Also, I was on BNN yesterday morning, so if you missed it and want to hear what I had to say about the broader market, I will provide a link in the description. Well, the market, and the NASDAQ in particular, has been enjoying what I suspect is a counter-trend rally in this past week in hopes that the Fed is going to be cutting rates. And most of the FANGs have been coming alive a bit as well. Where this will lead to, I'm not so sure, as peaking interest rates have tended to lead the stock market at tops. But we will take what we can get when it comes our way. Since my last FANG Friday video, we have processed the latest balance sheet from NVIDIA, and you will see that it has considerably changed the recent picture of the stock market action around its breakpoints. I do have to say, and I will say again, that in my long experience with using SVA, as soon as the market has a new balance sheet to work with, it adjusts to that new balance sheet and indeed carries on as if the new one had always been the actual one. It can be a bit unnerving when you first encounter this phenomenon, but the stock market always acts on the very latest information, basically the most accurate information as far as the market is concerned. And so we users of the SVA service just have to fall into line as well. However, I'd like to be able to refer back to those old balance sheets, and you can as well. With that as background, without further ado, let's take a close look at the FANGs for this week. As always, before I do like to say thanks to everyone who likes this video and all our subscribers. It really helps to grow our channel, and we appreciate it greatly. Okay, let's start off with NVIDIA and look at the chart this week. Remember, 2 weeks ago, we were looking at the HB6 price, that's 33 times book value, as being the place where the NVIDIA had a dead hit. It rallied. Actually, it rallied from its HB6 to its then HB7, set back again to its HB6, and now with the new balance sheet in, just processed, we now find that the stock has actually come back to its HB7 price again. It's no surprise that today it's having some difficulties going any further. Amazon, look at that, Amazon, after struggling at its bubble price, that's 7.4 times book, has actually broken out. And, we'll have to see if it's going to be a kind of a breakout pullback and on. But anyway, it's a promising development as far as Amazon is concerned. However, the prize of this week's FANG Friday has got to be Alphabet. And Alphabet fell right down to its MSG price. It's 5.5 times book value and is now in the process of rallying. I love to find these kinds of stocks, and we avidly seek them out as these offer the best opportunities. Microsoft never got down to its HB1, which was actually I was kind of hoping it would, and has just been trending sideways. There's nothing much useful that I can say here. After hitting its peak at its HB2, it has given us no useful trading signals whatsoever. Meta continues to dither at its bubble price, doesn't it? It's been trying now for, since January. That's 8 months here to do something to sort of get a trend going or hold the bubble price or not, as the case may be. This truly is what I might call a kind of a maddening stock. However, if you hold it, I guess you got to stick with it, because look at that, the fair market value trends are rising, and Zuckerberg has promised to do everything he can to get those earnings flowing through. Apple, well, Apple is not doing badly, but it's kind of drifting slowly lower, which is pretty much in line, with its fundamentals. I mean, here's a company where the sales and earnings aren't really going anywhere, and in the meantime, the company has an enormous valuation. In fact, the highest valuation of any stock going. Its current market cap is almost $3.4 trillion. Well, with very poor fair market value, it's a stock that continues to greatly concern me. Tesla has, well, it hit its HB2 beautifully. Setback, looks like it was going to head down to its bubble price, didn't. Pulled back and has just been riding its HB1 price ever since. Not much I can say about that. I continue to be very concerned about the outlook for the stock, particularly when I see that the fair market value is some 75% down from the current price, and sales and earnings just going nowhere. Finally, Netflix. Netflix is kind of interesting, isn't it? Because the stock has been actually struggling here at its HB2 price, that's 12 times book value, to what? To possibly break out. And by the way, if it does, it might head back up towards its old high, which was actually at its HB4 price, which is up, it's about 24 times book value. So that would be quite an increase in here. However, it's got to break out first, and it simply won't do that so far. So to briefly recap, as of yesterday's close, with its new, that is to say, its newly updated balance sheet, NVIDIA is right up at its HB7 price, and today that level is pushing back. I would strongly suspect that the shares will not be able to break out here, and that they will set back from the current levels. But that is only my own opinion, and I have long ago learned not to try to tell the market what to do. Amazon looks to have not only recovered back to its bubble price, 7.4 times book, but is breaking out again. So far, so good. Alphabet is the kind of opportunity that we avidly look for. Alphabet enjoyed a perfect hit in its MSG price. That's 5.5 times book, and is rallying. When I see stocks like this, I generally recommend to my clients that if you would like to play the stock, this is the best time to buy. If the stock then subsequently fails to hold here, you have the least downside risk of loss. Why? Well, consider that if you do buy here and you're wrong, that is to say, if the stock fails to hold at its key breakpoint, you will find out quickly. And you can sell equally quickly before a tiny loss becomes a big one. Microsoft gave us no useful signals in the past 2 weeks, and as far as I'm concerned, its downtrend from its HB2 price is intact. Meta, of course, continues to dither around its bubble price, 7.4 times book. For investors, I would refer to this stock as maddening Meta. It's cheap as the FANGs go, but the shares refuse to commit one way or the other at its bubble price. Apple continues to drift very slowly lower. No surprise given how expensive the shares are and how very, very slowly sales and profits are growing. Tesla acts, well, sort of, despite horrific fundamentals, in my opinion. Sitting just above its HB1 price, 9.5 times book, it's hanging on here. But Musk will need to pull more rabbits from his hat to justify the current valuation. Finally, Netflix could be trying to break out over its HB2 price, that's 12 times book, and head back to its old all-time high, which is a couple of breakpoints higher. But the proof of the pudding will be that phantom breakout. I will conclude by saying that I am glad that I have SVA to help guide our investment decisions, and sometimes things seem a little questionable, SVA or not. And this is one of those times when there are at least five FANG investment outcomes that could go either way. NVIDIA leading the way, but joined by Meta, Netflix, and I might actually even add Alphabet and Amazon. Anyway, that's all for this week. For now, this has been Ross Healy, the chairman of Strategic Analysis Corporation and a senior portfolio manager at McNichol & Associates Asset Management, reminding you that nothing, including investing, is difficult if you have the right tools. I will see you next week.